Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and we've got quite a lot to go over. We will be reiterating our stance on the cryptocurrency market, and the fact that we still think there is further downside to be had. There's a lot of contagion that I think is going to come out of what we've seen with FTX. I mean, we're only just starting to see the ripples of the FTX contagion. We're finding out that pensions were involved in regards to investing in FTX. There's going to be a lot of collateral damage that I don't think has been able to play through the crypto space just yet. And it's always when the tide sort of washes out in these kind of, negative situations where you see who's been swimming in the sea naked. We're getting lots of reports from other exchanges, Huobi and Gate.io under fire for allegedly sharing snapshots using loaned funds to kind of bolster their credit and their credibility. This is extremely unethical and actually irresponsible if this has indeed been taking place. A wallet address linked to Huobi Exchange was found transferring 10,000 ETH to Binance and OKX deposit wallet soon after releasing its asset snapshot. We also saw, and this is 3 weeks old now, guys, but it's really just hit the news today, that Crypto.com accidentally sent 320,000 Ethereum to Gate.io and recovers funds days after. So maybe there's a bit of this going on. And I can't help but feel sad. We've been short and we've made money off of this. But I can't help but feel sad about the whole situation. I don't think people really realize the damage that has been done by Sam Bankman-Fried and FTX to the crypto space. And it's really sad for me to see this. I do believe it will recover. I was going to bring up the Wall Street cheat sheet and a number of other things today. But I really just want to talk about the situation at large and really the damage that's been done and the fact that we actually see so much tomfoolery in this space, so much unhonesty, so much disingenuousness. It's disgusting, really, and a lot of these actors deserve to be taken out in a financial sense. The real sad part for me is it's the people that get caught up in the crossfire that often pay the price, and it does look like. FTX, we covered yesterday that they were allegedly hacked. It turned out to be a potential inside job where they're trying to drain funds and run away with whatever. And this story's grown arms and legs to Sam Bankman-Fried being on the run, and it's turned into a Bonnie and Clyde situation with him and Caroline. There's just so much damage being done here. And FTX, actually, even myself, I wouldn't have said that they would have been one of the ones to collapse. And in fact, they were, one of the biggest. I honestly believe this is one of the worst things to happen to the crypto space to date. And I don't think the effects of that have been felt. And we did show you the other day that if you look at these kind of contagions, they typically don't just stop here. There's often continuation. If you look at how these kind of periods of capitulation start, we're essentially just maybe somewhere like here, and we have considerable, or even here, and we have still considerable more downside to be had. This is why we're not buying here. This because it's Sunday, I just wanted it to be more of a chilled out video where we just sort of talk about everything. It's a really, really bad situation. We're seeing other exchanges really get highlighted for their ill practice. And was the likes of Buffett potentially right? Let's hear about what Buffett said about the crypto space back in 2018. Now, I think Buffett's really missed something in regards to, and we know that Buffett invests in companies that, have an interest in the crypto space. But I think he's missed something in regards to the technology here. And really what's going on, and the fact this is a technological revolution. He wasn't a large player in the internet. And, I think he's missed something. I don't think he's accurate on the crypto space in regards to it not being a good investment. However, I think he is accurate in the sense that he, knows the kind of people that get attracted to these industries. And this is what he had to say back in 2018.
there's nothing being produced in the way of value from the asset. That you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who are trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending. Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think that people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
And, I kind of agree with some of what they're saying in regards to the actors that this space is involved in. And in bull markets, very much people buy crypto on the prospects of getting rich. And chasing fast money, guys, is one of the easiest ways to lose money. There are real value propositions in the crypto space, but you have to be here long enough to appreciate them and to actually benefit from them. I made life-changing money from just simply being and sticking around in 2018, 2019 and got to endure the last bull market. And that's really set me up now. And that opportunity will come around again. It's just about being patient, in my opinion. And like I say, and I want to, make this point absolutely apparent, is that you don't just consolidate for, a grand total of 150 days, nearly half a year, or significantly less than half a year, to just spill 20-something%. You usually, and the longer you consolidate, the more momentum is behind the move once it's had a decisive break. And this is my worry that this continues to the downside. We had targets at 13K. There are possibilities that it does go lower. Where would I potentially be interested in buying? Between maybe 11 and 12K. But we'll see what happens when we get there. We're not really trying to call a perfect bottoming price here. It's really just about, being an active investor and following this thing on the way down. But it's certainly very sad what's happening in the crypto space. Remember, guys, the futures market and then, of course, traditional markets open tomorrow. The futures market will be open tonight for us in the UK. But we've seen a massive spill from the dollar. And I think this is, we saw inflation come down. We know that the sort of futures market for the Fed fund rate is getting repriced. The problem for me is I think the dollar has every reason to continue actually going higher and taking out these highs. And I think the dollar is, we did say you're going to run into resistance here. It's very, very overshot and very sort of exhausted. But I think you end up in this kind of a situation for the dollar where, okay, yeah, we've seen a real harsh pullback. But does it, sort of hold and then go on to do something like this? And I think that's going to be detrimental for everything. I think, yeah, we've seen contagion in the crypto market. And we've seen, I would say, capitulation, but it's not over. We haven't seen that in the traditional markets. And I still do believe that we are looking at some sort of a systemic debt failure, given everything that's going on. I think this is what the yield curve is predicting. We haven't seen the fallout of the yield curve and what potentially it is or isn't predicting. We haven't seen the stock market have that 2018 kind of style crash yet. I think this is very much within the realms of, a normal pullback that we've seen from 2008 onwards, when I think the situation that we're in is vastly different and is recessionary. And that's why we're seeing inflation come down because of demand destruction, so on and so forth. And we don't flip bullish on markets until we see a reason to do so. And just a slightly lower CPI print and a falling dollar isn't quite that. We need to see an actual pivot. And remember, a pivot, guys, is not a stopping of interest rate hikes or a slowing down. It's a reversal, which will free up liquidity. And that's when we look to get back into the markets. This is some of my thoughts on what I think potentially is how I think maybe there's always a backstory and a motive. And just like with politicians, just like with central bankers, are they that dumb? Maybe it's greed, or maybe there's an alternative agenda behind all of this. and this is speculation, complete speculation, but regulators, the government, you know, have the best reason they could have possibly now have, you know, the best reason they could have possibly came across to actually get involved in this space and to look to regulate it. And this is the way that things are going to have to go, unfortunately, now, guys, because you can't not regulate. You know, what we've seen happen with FTX, and I've said this for a long time. As a day trader, the market became very different with FTX's involvement. Just how you saw the price move, stops would get ran a lot more consistently. Maybe I'm being a bad worksman and blaming my tools here, but you know, the price moved itself in a very different way. You know, I think FTX's involvement has been hostile, and was CZ maybe, you know, trying to flush out that rat. You know, there's lots of speculation on it, but one thing I do know is this is going to bring regulators. We've already seen Gensler's comments kicking and screaming into the crypto space, and I think there's going to be, you know, negative repercussions from that. I also think potentially there are going to be positive. You know, for this to be what I believe it is, the new asset class that Wall Street are going to get on top of, and they're going to, you know, really promote it and push it, which we haven't seen yet. We've seen their involvement, but not to the degree I think it's going to be. We need regulations because that offers these big institutions a lot more safety in regards to getting into the crypto space. So that's really all I've got for you guys. Bit of an interesting one, or bit of a different one. Just looking at everything. Remember, if the dollar starts to rise up again, okay, yeah, we've seen a bit of a discorrelation here, and this is one of the really scary things for me at the moment, guys. Look what the dollar's done. Look what Bitcoin's done. They've almost been following each other, and in actual fact, this dollar movement should have, if we didn't have the FTX sort of issue, you know, I think Bitcoin would have been at maybe 25 plus K potentially. And this has just, you know, technically we had every reason to be short. Obviously we now know why, but Bitcoin should be rallying on the back of this dollar weakness. The problem that I've got is, okay, if the dollar starts to show strength, certainly if the dollar goes on and puts new all-time highs, which seems unlikely here, guys, but I don't think it's that far-fetched, then, you know, Bitcoin's going to continue to go down with the stock market and everything else. And we continue to stress that, you know, this is all a liquidity game. You know, we've had some pretty harsh price action, certainly in the Asia market, for example. It's natural that you're going to, you know, get some sort of harsh rally where you have loads of shorts getting trapped and so on and so forth in this kind of a market. That's all I've got for you guys. Sorry, it was a bit of a less punchy one, but we'll be back tomorrow again with the updates, and we've also got some really exciting content to release to you guys to really educate people on the crypto market. All I've got for you in this video, guys. You enjoyed the content, like us, appreciate it, as a comment. Catch you all in the next one.